Sorry about that. Somehow the broadcast always seems to start automatically without me doing that. I don't know why. So sometimes I don't have my headset there yet. So welcome everyone to Admiral Markets. Glad that you could make it on Thursday the 8th of August. We're going to take a look at intraday trading today. So I'm glad that we have that focus because as you notice we're I think it makes more sense. So today is our first intraday session. Good morning, by the way, Alkana and Graham and everyone else. Glad that you can hear me, I guess. That's good, first of all. We're going to take a look at this PowerPoint, of course, and then we're going to take a look at the economic calendar before looking at the charts. Alrighty, there is a disclaimer explaining that trading foreign exchange and global financial markets is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this video and webinar is for, I said it for educational purposes only. I'm repeating myself, I think. So please be aware of that, and all decisions regarding trading are yours. Okay. So welcome once again to the live trading room hosted by Admiral Markets, presented by myself. Today we'll have an educational webinar as well. That's I'm not sure at which time. Normally that's 6 p.m. Central European time. Today's strategies, we're going to, it's a bit different. We're going to be more looking at the pivot points, for example, so and breakouts as well. Make sure to follow Admiral Markets in Facebook and Twitter and the social medias. And now we're going to take a look at the calendar. I don't think we have anything serious within the beginning London session, if I remember correctly. Oh, there's a Bank of Japan press conference approximately at 8:30. So that's 45 minutes from now. I wasn't aware of that. It was still, I thought the time was unknown. That's interesting. That could affect the yen, of course, so we might be careful with the yen, although we'll probably look at the euro dollar, pound dollar anyhow. The dollar jobless claims is a while away from here, and we have Aussie monetary policy statement way later today. And an ECB monthly report, I see. That's about it. So I'm going to use a bit different template than usual. There's a lot of screens here, so don't get scared. We're going to take a look at one by one. So I know there's a lot to digest here at first glance, but basically it just gives us a quick overview of a trend on multiple time frames instead of me scrolling back and forth to everything. You can see here, for example, the daily 4-hour, 1-hour view. Quickly that we're in an uptrend. You can see green candles. These are special colored candles, though. You see the momentum is to the upside, right? We can see, for example, here on the left, there's a fib confluence. So there is some resistance around the 137, 140. I got some comment that the sound is low. Does anyone else have that problem? From my side, I have it as always. Okay. Rio both or Booth. The others are saying that everything's fine, so it could be on your side. Try to, maybe it's the PC value or your headset, okay? I hope that helps. You can also see support. This is a fib confluence indicator right around 133. So resistance, of course, usually above there. We can see price above this faster moving average here as well. The 50-minute world is showing something similar. Here we can have a quick overview of all the indicators regarding MACD, what their value is. You can see kind of green across the board. I'll make that a bit bigger so you can see it better. You can see almost on all time frames we have green values here. All right. Now that doesn't necessarily mean that we're going to have a great upside trading, of course, because we might bump into resistance, but just confirming that the upside is quite strong here, right? So that's a quick overview there. What else can we look at? We can see, this is the 5-minute world, by the way. You can see a bit of a spike here already. The oscillators here at close to the oversold region, right? Alrighty. We can see here as well, let's take a look at the pivot points here. I have to use black for this, as I told you yesterday. We can see that basically we have a L3 approximately at 133.13. So that's still 30 pips lower. So that could be as indicated by the Fib confluence indicator as well. That could be a potential support area. Just from a classical technical analysis, though, if we have to put that aside, we can see these tops, of course, as well being broken. 133 was a major level as well, of course. So logically, if we go back to that area and zone from a just a logical perspective as well, that could be a bouncing spot, right? So that makes sense. I always like to confirm certain indicators with technical analysis as well. So we can see that downside is way lower. If we put a trend line like that, downside is more in that below the 133 region. And upside, which is the preferred trade, we got a H4 long breakout around 133.78. Right in here. All right, so that's the Camarilla indicator there, giving us the information regarding the long and short breakouts. Alrighty, let's go to our classical view right in here. And we can see that price nicely above this band of moving averages. And let's do our classical analysis now. We're already above yesterday's high, first of all, the euro dollar. So that resistance is in a way out of the way. We have a clear daily pivot point, or not pivot point, but I mean high at 133.42. We've pushed above that as well. So the next daily resistance level is at 134.13. All right, now we could put a fib on this downside as well, but we're actually respected to 886, so there's no fib within that zone that could be an obstacle. There could be a target maybe in the way. Let's take a look at that. If we fib the first move up, and we stopped at that 272 target of the move up during FOMC. So the next target is minus 618. That's way far away from here, right? So that would not be an obstacle as well. So we can take that off the chart. No need to keep it on. Okay. Now on the daily chart, we can see that both the let me change this color. In fact, yellow is not the probably not the easiest for you to see. Alrighty. So we can see that the indicators here showing upside on the daily. The awesome oscillator is clearly above. MACD is showing positive values. So price is breaking above here. The question is, of course, we are just at a resistance spot, still in my opinion, although we are breaking above those levels. So in that regard, I do see a small trade to the upside here, panning out or playing out, just because we broke above the major resistance levels. It is possible. I don't think there will be a lot of upside, but there could be a small intraday trade to the upside. I would never take a position trade here, personally, because it's too close to the resistance at 130, 113. The stop loss on like a position trade would be all the way below probably 130, at least below 133, 132.60 even maybe, to be safe, because that's the 4-hour support level. And we can't expect the price to go much above 134.10. So that's at best a 1-to-1 probably. I mean 1-to-1, maybe 1.5-to-1. It's not a great trade as a swing trade, right? But there could be some potential for upside and a good RTR if we zoom in to intraday trading. All right, there's always a risk, of course, if we use a small stop loss to lose that trade, even though the currency would hit our target. Our target is 134.15, so that's the risk of going into smaller time frames. We can get taken out and then still see the target hit. 1 hour, let's wait, let me go to the 4-hour, back to the 4-hour world here. We can see if we just do some technical analysis here that we are in upside. We also have a steeper angle here, more recent price action like this. Sorry. We can even draw something like this as a resistance line. It's like a channel, and we have maybe even here a line as well. So those are kind of trend lines we can keep an eye on. The 4-hour is moving up, but it's moving up correctively in my opinion. The angle of the price movement is weak. That is at best looking like, I don't know, what is it, 30-degree angle. If price moves impulsively, it's in fact usually at a 60-degree angle. If it moves correctively, it's usually at a 28-degree angle. Maybe this is 30, so it's more corrective price action so far. Now that doesn't necessarily mean price cannot move away in an impulsive manner. If it would, it's going to break the top trend line here. It's going to break above this deep pink line. All right. Let's see. Yes, Adrian. 4-hour world showing divergence, indeed. Yes, correct. Now, divergence is a tricky matter because the thing is that they take time sometimes to play out. And price is not always responding to it immediately, and you could have more upside before you get that bigger retrace. So that is always a tricky matter. It is definitely a warning sign, so fully agree. And together with that corrective price action makes it very tricky trading, very tricky. So if I would be a swing trader, as I said on Tuesday, Wednesday, I kind of discarded the euro because of that. Let's see, what else? One thing is that the AO hit the zero line here, and we're building on a new AO. So that could take a while to play out. Let me take a look at the AO on the day chart again. Yeah, okay. 1-hour world. Let's see. Kind of seeing that rise. It's a bit of a rising wedge, maybe even as well. But that pink line, pretty important. Let's see, Raj. Those three moving averages are 34 EMAs, okay? But they are, all of them are 34 EMAs, but they're the high, close, and low. Darshan, I'm not sure about the EJ. We'll take a look at that later, okay, when we finish this. I really didn't focus this morning on the EJ that much, so I wouldn't know by heart. But we can take a look later on, okay? If you hang in there with me. Adrian is saying the Aussie swing trade and yesterday didn't go as well. No, no, we'll take a look at that. We'll review the odd dollar and euro odd. I lost money on those yesterday. Oh, this is not my real trading account. 1 second. I lost there yesterday on those two trades. Those things happen. You know, it's never never a guarantee. You know, there's a statistical probability. In my back testing, there's an 80% chance of those trades hitting a 1-to-1. Well, there's always a 20%, you know, that doesn't play out. Nothing we can do about that. So it was a pity, but next time better. Okay, I'm a bit slow with my analysis because the euro dollar apparently is breaking to the upside. It's breaking that pink line as we speak. Right at the top of the hour. It's kind of funny. Not sure what happened there because it just moved 23 pips within 2 minutes. So as I said, there is always that potential to break that top line with an impulse. That can happen when you're in an uptrend. The move starts correctively, and you think, what is this? It's just moving slow. It has to break down, but in fact, then it breaks the upper line and moves impulsively to the upside. It can happen. So that's what it's doing now. It's really pushing the. It already was definitely. If you look at the 1 hour chart, of course, we already pushed above the 133 resistance here, and then when we broke this resistance here, this upside was likely, and now we're pushing again up. So just a question of where we can enter, I guess, especially with this impulse. I wouldn't jump in here. I don't like to jump in when the price is moving this fast. Either I have the trade plan, which we were not there yet because we were still analyzing it, or I don't trade it. I rather wait. I need a specific plan. I just don't jump in here like that, of course. So we'll have to take a look. Let me take a look at the classical AO here on this chart. Let me actually add the classical AO here. That's all right. Well, what I'm thinking of is in fact to let this 5-minute move finish, and then let the 5-minute AO retrace back to the 0 line, and then take the next fractal break up. That would be one way to tackle this upside momentum that we just saw. All right. So this is just the first momentum. There will be one more, in my experience. So if we don't catch the first one, which is always a bit more tricky to catch anyhow, because we're not even sure if there will be that momentum in the market. Now that we see that, we can try to catch the second one. All right, in my opinion. Let me take a look at this. We went through the H3 shorts. Let's see what the price does when it approaches the 133.78 area. That is resistance here as well. All right. Let's take a look at 1 hour chart again. And I'll put some fibs to see if there are any intermediate targets there. We stopped at the 272 here. of this first move up. There's a minus 618 target at 133.80. So I think that's a likely pullback level. So we could probably see a few pips up still. Looking at the 1 minute chart, that is very likely. That still has lots of space to the upside. Still, you know, lots of momentum here because we just had an impulse. The only time frame that I probably could see a trade right now is if you would scalp it on the 1 minute, because otherwise the risk would be too big compared to the resistance level. That's the only thing that, you know, would make sense. But to be honest, I don't really trade the 1 minute chart too often, so or never actually. So I wouldn't do that. I'm more of a, at minimum, what I want to see is 5 minute retracements. So, you know, I can't guide you on that one there. The pound is apparently pushing through the 156. Wow. Well, that was a major reversal, wasn't it, yesterday? Holy smokes. That's what, you know, press conferences and inflation reports can do. That's why it is sometimes tricky. The 382 on our pound especially got hit. That moved down to the minus 618 target and bounced off that target to the pip. So it didn't hit that 50 fib, so I took off the trade. Yeah, in fact, if the 382 went exactly to the minus 618 target, but then close in reverse, just like the pound dollar, crazy move up and down and up. So that's wacky stuff then with the news events. That's really typical news event trading, and very difficult to trade if you use technicals, classical technicals. Yes, indeed, Raj. Carney. You know, Charney, I don't know how to say it, but sure, it was a roller coaster, though. Absolutely. So, in my opinion, there's nothing to do on the euro until we hit some resistance and pull back. That's my opinion. Any questions? If not, then I'm going to move on. I only have this window here for the euro, so I'm going to move back to the classical viewing here. Take a look at the pound. I don't see 156 though. Oh, Darshan, you can see the pound pushing past 156. Sorry, I thought it was passing 156. That's funny. Yeah, possible. Definitely possible. It's funny because of the volatility. The H4 long breakout is all the way at 156.70, so that won't be much of use today on the pound dollar because that's 170 pips away from here. So I'll use something else here to look at price action. Look at that upside of 300 pips basically within minutes. Really crazy. From a longer term perspective, it looks to me now that, as I said, downside, there was space for downside. That did happen. Sorry about that. All right, there was that downside. I said basically that even if we have upside after that, first down and up is possible. So Elliott wave is useful sometimes at these spots. Why? Because even if this is like this, or we have something like this, right at the pink circle here, downside is possible almost in both scenarios because of this, as I said yesterday. Right? So even after upside, we had that downside. Just to retrace the first upside. Right? So in my opinion, still we can put a fib on this move now because those are still resistance areas, especially the 886. I don't think the 786 will prove to be much of a resistance anymore because we kind of paused there anyhow. So I think the 786 has been taken out. We could put a fib on the up move now as well, easily because we broke the top, and you can see that fibs work everywhere. Where did we stop? Right at the 50 fib. It's not tradable, I would say, necessarily. It's difficult to trade. But now that we can use it as information for the target here. So the 156, let's see, 156, 156.40 area is now the next major resistance level. That's still 100 pips away from here. Now if we'll push through that area, that remains to be seen. We can push to it. Then it depends also on what type of formation we see here. If we see a bull flag and break, well, then we're pushing apparently higher. If we see a close and reverse here and a slow upside, then most likely a fall is in the cards. Okay. This 886 could definitely still be a major resistance, and it could still be an impulse, a zigzag correction, and then a major fall. Personally, that's still probably my primary analysis, but it's kind of, yeah, we have to see because the upside does look very impulsive, but that is quite common with zigzags. So we'll have to see. We'll have to see how price responds to this level, as I said. If we do move correctively, we have to definitely wait for a break, because even if it moves correctively, it could all of a sudden drop like this. I've seen that more often with the pound, where it starts correctively and then just drops. That's because we're actually building a 1-2s, 1-2s, 1-2s to the downside, and not a bull flag. So be careful of that. Once we hit the 886 and move down, probably actually want to wait for a break above 886 before trading. Anyhow, we're looking a bit too far in the future, in fact. It's like a chess game, isn't it? Adrian says that the C wave is way too impulsive right now. That's an interesting observation, interesting point. Let's take a look at that. Yeah. I'm not, it's an interesting point, and I value the opinion. Now, I don't think that necessarily has to be so. It is true that price action is just tremendously large, but that's why I don't think the 786 is relevant anymore because of that. So partly I agree with you in a way, but if we do get a correction here like this, and we move up to the 886, we will have a resistance line here. We will have divergence between the tops, between the most recent tops. We will have a kind of a three-wave motion here. So with that said, I don't think it has to be too impulsive. But not necessarily, if you see my point. If this were to be actually an upside, if this were to be, let's say, a beginning of a C wave, and we get really more upside, which is possible, this top can be broken, then let's see. still I would only trade it above the 886. After, yeah, we could trade it to the 886. Once we reach the 886, I would only trade it above the 886. So in that case, we kind of solve the whole issue if it's what our thinking is regarding if it's too impulsive or not, basically. But it's an interesting observation. And in some cases, it's definitely true that certain moves have so much power, that the turnaround isn't likely not going to happen there, just like here. Right? Let's see, 50-minute worlds. I think the pound is, for me, it's almost untradeable. I don't know, personally, because of the risk factor that it could drop here and then move up. Maybe if it does that somewhere in here, trading it would make more sense. Let me take a look at let's see. Here it is. Yeah, the L3 is around 154 indeed. We got tops in here, pivot point here. So that would be a support area. That would make sense in a way, but I would not take it immediately there with the entry order. Yeah, entry order. Definitely not, because the risk is too much. I mean, this is a massive risk. Would only take it if we make a down move, show a bounce, make a fractal in here, move down, and then take the next fractal break. So I have a clear stop loss here. That would be really the only way. Otherwise, I wouldn't trade the pound, I think. Even if we break probably above here, maybe if we break above the top, let me see. Let's put a fib on this impulsive move. Both these fibs are high likely bouncing spots. I don't think we'll see a 50. Not after such an impulse. Usually you don't see that. Target would be -27 at around 156.20. That ties in also to the 886 fib, I think. Approximately, yes. So only if it retraces this to this fib. If it breaks from here, I'm not touching it because that would be wacky if we don't go back at least to the 236. It's possible. Maybe if we break above this high, I don't know, stop loss here. Still looks iffy to me. Let's see. Yeah, it wouldn't be my favorite spot to risk capital. Let me say it this way. Probably it might work if we break above this top. Probably we're set to go for that upside to the target. There's sufficient risk to reward in a way. Do I like it? No. Pound likes to break tops into the opposite, so especially with the pound, I would be very leery. So that's my thinking on the pound dollar. Let's take a look at the odd dollar. So it looks like we're getting a bigger bigger retrace. Someone told me yesterday there was tremendous value speculation on downside. Now what can happen is some cases, not that I don't use that information for trading purposes, but if there's such an oversold value in the market that sometimes you do get short squeezes, and if the stop losses get triggered, you're going to see an expansion fuel a further fueling of the upside, right? Because the short positions get closed, then you get the opposite. From a wave perspective, indeed, Adrian, totally right. And that's always the tricky thing with that, is that this was a 1 hour retrace. This was a clear 3-wave correction on the 1 hour world for either a C, right, or just a part of a bigger, that ABC is just a part of an A, right? And indeed, it's developing a bigger ABC. Now, those things are tricky. That's why, no strategy will ever be 100%. The break of this 4-hour support world was for me the trigger, and that's why it does work often. But there's always a 20% risk that it doesn't, just because of this. And we're actually expanding the correction to make a 4-hour correction, not a 1-hour correction. All right. So if we look at the 4-hour world, you can see that it's actually now a 4-hour retracement. And sometimes, that's how the currencies work. We get another move down, and we make one more upside to get maybe a daily pullback, and then we could still see a fall. Each time frame has its own building block that becomes, the market is, how do you call it, fractal. So all the way from the 1 minute is the first building block, and those building blocks make up for the next building block, right? So that's why often you see, for example, a down move like this, and you see something like as follows happens, especially on the pound. You see that often. You see the currency turn here. See first upside, downside. You see support kicking in right at the bottom, move up. And the moves to the upside stop at the fibs. Stop at the fibs. But move down, back to support, find support, move to the next fib. Find resistance, go back to support, go to the next fib. All right? And then it depends on the higher time frames whether this is in fact total upside, or if we do move down here. You'll see that often, that pattern. So if we continue with this 4-hour analysis and leave the fib on here, you can see that we're at the 50. If we look at our LA wave analysis, we could put a resistance line right in here. And I would even mark that big red. Why? Because if we break above that level, there's a less likelihood of the analysis, the LA wave analysis playing out. This could still be a 1, this could be a 2, this could be a 3, and this could be a 4 if we stay below, most likely, 91.30, most likely. I mean, if we have a small spike above it and go back, that's okay, but roughly speaking, this is a highly leveraged market, so that can happen sometimes. And we should go down for wave 5. Wave 4 is not typically so impulsive and is not typically so deep. Normally the 32 or 236 are the deturning spots, not the 50, not the 618. Usually never these, right? Just because wave 1 is usually to the left. It's a bit untypical, but these are just guidelines, so it can happen. So this analysis still stays the same, and you can see that we're just making a bigger zigzag retracement on the 4-hour world instead of the 1-hour world. And indeed, Adrian, it's totally true that it's kind of ironic that this happens at the moment that actually the interest rate got cut. If this would have happened with the interest rate stable, staying the same at 2.75, would have made more sense. With a rate cut and such an impulsive move up, it is kind of ironic. I totally agree. It's very funny. That's kind of interesting how at the 89 level, the interest rate gets cut and it moves 2 cents up. Very funny. So personally, I don't know if you agree or not, but to me it looks like a short squeeze. I think that that is the case, but okay, doesn't really matter why. And Adrian and I agree. For me, the downside is definitely still in play. The day chart, funny enough, on, when was it? Monday, we had a pin bar here, and it's really getting good follow through. Very funny. So maybe the technicals overruled the fundamentals there. I don't know. What else to say? I wanted to add one thing. If we fib this up move here, we can see that the currency stopped at the 50 fib. That was a support area, and minus 618 is pretty close by as well. All right, so I think that we could still go up to 190.91. We reached 90.86, so there could be still some small upside left. Not much, but a bit. Excuse me. If we fib the A of C, most likely, we can see that this up move also went back to the 50 fib and also hit the 618 target. So if we fib the next move up, you see how these 618 targets are working nicely. Here too, if we move to the 50, that could be a bouncing spot for that one more move up. I don't think we'll pass the 272 though. We won't go to the 618, I think, just because then we're bumping into higher time frame resistances that will not allow the currency to go to this smaller fib target. All right. Now, one thing to note though, and I did mention it to other traders, not in our session I think, but in the afternoon, is I did say I didn't change the trade because I followed my trading plan, but from a perspective of corrective impulsive, I have to admit that I did say here that, I'll tell you when it was the New York Open, let's see, somewhere around here, that the move is not moving impulsively. It looked more corrective of nature. The angle of the price wasn't at a 60 degree. Usually when you have a trend channel, price moves at a 60 degree angle, the correction is at a 20 degree angle, price moves at a 60 degree angle, corrective is at a 20 degree angle, and the entire trend channel then usually has a nice 40 or 45 degree angle. Not that price moves at a 40 or 45 degree angle, the channel moves at that angle, which means that price is moving either faster during impulsive or slower in corrective. That's why impulsive moves time factors fast and the correctives is slow, because it takes, the angle is shallow and it takes time to get to the bottom of the trend channel. All right, so that was something that I must say didn't like. All right, it wasn't quick enough. Anyhow, so if we get that downside here, a long could be possible in my opinion. If we would have reached the resistance in here, then not. All right, because actually then I'll probably be looking for an impulse correction and I'll try to trade it to the downside. At the moment it's a risky one because we are quite close to the resistance, but most likely we'll still make that, and it's kind of like trading the C of the C probably. the best upside trade was probably somewhere in at the 50 fib. All right, but it was not an easy one to catch because of this wacky up and down, making the the entry very difficult, very difficult because of that. Maybe the 5-minute world was better, but so let's see a downside here, a bounce off the fib, then the downside, and then the next fractal break would make sense to me. All right, that would be my plan on the Aussie. Let's see, Akana is saying that he was thinking as well, 91.10. Okay, great job, Akana. I think that's great analysis in my opinion. So I have a fibs just a tad higher and lower, so it's kind of in the middle, but definitely that entire area, 91, between 91 and 91.20 is a resistance level. Also, if you look at the AO on the 50-minute world, yeah, there's some divergence here actually, but there isn't on the 5-minute world. You can see that that upside was very fresh, very impulsive. No divergence here. All right, I'm comparing these two tops. So I think one more downside, maybe to retrace back to the zero line, and then an upside to get divergence here on the 5 and 50-minute world, bump into that major resistance levels. Something like that is interesting. Now, usually, as a swing trader, I'm not interested in this smaller CFC to the upside. But if you're intraday trading, it's actually nothing wrong with that trade. It is a bit risky because we are close to the resistance, as I said, but something that I think has a high probability of panning out, in my experience. So that's something we could keep an eye on for an intraday trade. Let's see what the euro has done so far. Yeah, it hit the 133.70, right? Didn't do much actually after that impulse here. Maybe there was some news, I don't know. Didn't check it, but spiked up though. Maybe it was just technical, but didn't go too far ever since, right? What I will be waiting for is at least, at minimum, a retrace of the AO of the 5-minute world back to the zero line. Alrighty. What's our pound doing? Alrighty. So I think there's more, yeah, the pound really waiting for that retrace, right? Let's take a look at the euro odd as well. So it looks like the level that I kind of mentioned, which was the 149, it's actually exactly where it turned. So that's a great job, Alcana. Nice that you put that entry order above it. Good work there. From an Elliott wave perspective, I think it's kind of the same story as the odd, to be honest. Here too, we're kind of having a 1-hour retracement turn into a 4-hour retracement. Here too, I think I said it, the pace and the angle of the upside was a bit worrying in a way. But the thing is with that is that sometimes you get and all of a sudden it bursts to the upside like that. All right, but the combination maybe in retrospect, all right, of up, impulse up, down, and here a corrective was maybe, from an LWA perspective, worrying. That really didn't influence my strategy because it's based off the 4-hour world, where the AO is back to the 0 line here, and in this case, a break of the 4-hour fractal. In fact, contrary to the Aussie, I didn't see it here. On the other, I look at other charts as well, and there it was a break. So sometimes, these fractals also depend on the price outlook as well. Here we didn't have actually that 4-hour fractal. The 4-hour fractal was actually at the 449 zone, so the signal would have been above it. But okay, doesn't matter. Yeah, it looks like it, but to me, the price is actually still in a support area. The 50 fib, just like the Aussie basically, at 146.50ish is a likely bouncing spot. And if you put a fib on this downside, we actually respected the 618, the 272 target, and the 50 fib confluence. That is a big support area, and maybe the 618, of course, if we get there. We also have a big supply and demand zone here, right in here. That is a level I don't see it break through immediately. So I think it's still despite the pattern, that head and shoulders pattern that we have there, I think it's an ABC correction to that level, and most likely a bounce to 152. All right. Now it does depend how price reacts there. If we were to make a very shallow bear flag, then probably we'll continue downside to here. So in my opinion, just like the odd, there's probably a small intraday trade to the downside, to the 146.50 area. Here too, we came close to that support level. We hit 146.80. So there could be one more downside. Look, just like the odd, basically, where we have some retrace, a fall, we'll get divergence on smaller time frames. We'll be at a very big support level on higher time frames, and then we'll probably see that. The 50 fib is a major attraction point, and as I said, currencies often do this. They have an impulse, and then they retrace to the fibs. The fibs are in fact the target. They go to the 236, bounce, find resistance, move down again to the 382 fib. That's the support, bounce. Find resistance, go to the next fib, the 50, bounce. But maybe this time the 50 fib is the bouncing spot, and in fact then the tables turn. We move up, go back, bounce. All right? This is what you often see. Playing from one fib to another, from fib to fib, from fib to fib, from fib to fib. So in that regard, I think that's what could happen here. Now we are getting closer to the 50 fib, but there's still some space, so I think enough space. I mean, if you miss the 50 pip by 5 pips, then I wouldn't target the 50 fib anymore, if you know what I mean. So this is wave A now. This was a wave B, 618 fib. So let's concentrate on the wave C here. We could put a fib like this. Here too, 618 fib of this wave A of C or 1 of C. This looks like a 3 of C. You can see we went to the 618 fibs. These fibs really work on all places, as you can see, on all time frames, because we went from 618 to minus 618, and we've already seen a lot of examples only just this morning, right, of this. It's not coincidence. So even on intraday trading, you can really use it. All right, so let's see. With that regard, we can move the fib now to fib this third wave, if you were. We can move the fib down. You can see a pretty strong AO here as well. It's a funny spike in here, though, in a way. Strange spike. That actually means that because of that, this is the correction, in fact. Here's the downside it starts. Oh, thanks, Rich. There was news apparently there. So looking at this, here too, the 50 or the 382. The 382 could be the resistance spot already, or the 50 most likely. And the target would be 272, 146.30, although I'm not sure if we'll get there. Let's see. Don't forget that at 146.40 we have that 50 fibs. So that's 10 pips above that 272 target. We could actually hit the 272 target because a 10 pip breach of a 50 fib is nothing. And it's definitely often seen. So would I actually put my take profit there? No, I would put it at a bit above the 50 fib because I like to be more conservative. We came 10 pips shy of this bigger 272 target as well here. I'm talking about this one, in fact. That's why I like to place my TPs also a bit higher, because that happens. Anyhow, so I turn here back to the zero line, just like the Aussie. It's kind of the same. Move down, and a divergence here on the 15 and 5 minute world when we approach that support is likely. Now, price is moving pretty impulsively actually on the 50 minute world to the upside. So looks more like a zigzag correction here. So we'll probably hit a resistance, move down, maybe even make one more upside like this, but in a slower fashion. Kind of get the divergence on the 1 minute world here between the tops. And then we can see the fall. Something like that I think is likely. I think the 382 will be a resistance. You can see on the 1 minute world that the move up was strong, got to retrace, move up, but we already have divergence between these tops. So maybe something like that, and one more push up, but then we should see bigger retrace on the 1 minute world, I think. So where I'm interested in as a intraday trader is more of like an intraday swing, where I see a turnaround here. I see, for example, a break. I see a break of a 15-minute fractal in here. That would be the entry. The stop loss would be here. And that would be the trade with a pretty tight stop loss, in fact. Probably 20, 25, and the target would be, could be even 100 pips. So it could be a 3 to 4 to 1 trade there, if, potentially. If you want to go for a more conservative target, I would go for 2 to 1 though. That's how I would try to catch this trade. I would never take an entry order out on the 50 fib here. Never, ever, 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 ever. Because the stop loss has to be here, And I think that's way too much risk in terms of pips, not of course in account size, versus the potential target without confirmation of that turnaround. Fibs on this time frame are very risky. I think definitely want to have a price action signal confirmation there. Yeah, that's a good observation, Alcana. There is indeed a ECB in 50 minutes. Maybe that's why. The euro is still moving down, so the Aussie must moving. Yeah, the Aussie is moving down indeed. So we're viewing the charts in a way that we're expecting retracements. We need a retracement, or at least I need a retracement, and then I need a turnaround and a break. So the fortunate thing is that that just takes time. That's just the disadvantage here. So yeah, nothing we can do about that. That's just bad timing for our session. We can review the euro still one more time. See, the AO is still away from the zero line. Now it could break without reaching the zero line. It could break this 5-minute fractal high at 133.16. I find those breaks without the AO to be the zero line on the 5-minute a bit iffy. I would skip it personally. I would really want the AO to go back to the 5-minute world. But what that means is that it's definitely going to take some time before it reaches the zero line, as you can imagine. Let's take this example here. We get an up move strong AO before it reaches the zero line. You're looking at 2.5 hours later. So, when we got the break here, it really a long time factor here, right? That's after the AO peak, you're looking at 4 hours after that before you got the break. So that's the thing. It could be a bit faster here maybe because we're not as high. The peak was smaller than this one, so it could happen a bit faster, but you get the point. So let's see if there's any other intraday trade around. Scan some other charts there. See if we can find something that's set up now. Okay. Darshan had a question actually, I think. Did I answer it already? Oh, the EJ, no. Darshan, I'm going to look at the EJ if you're there. Let me know if you're there. Otherwise, I'll wait. Maybe you're just popped out for a second. The dollar CAD hit the 272 target, right? As established by us. Right to the pip. That's always cool with those targets. We went for conservative target, or we went for 17 pips lower. It did struggle at that area. That made a final spread up, and that has been correcting. So I like this upside on the dollar CAD. We're back at the tops here. But I'm not sure now because we could be making a bigger correction like this. A break of that bigger correction would be something I'm very interested in. Now I'm still a bit cautious. These fibs could be support. Maybe something like at a 618 fib could be interesting. So I'm still in a waiting mode here. Here too, personally, I wanted either a bigger bull flag or maybe a move to the 618 fib and then a turnaround on the 50-minute chart. So I don't see anything on the dollar CAD. Let's take a look at although I'm interested in the upside, I don't see it yet. Right? So let's take a look at the euro yen. Tricky. We broke out of this correction, and here too you can see at the angle of the price that it was definitely, there was some good upside. And what I thought was interesting is when we broke this head and shoulders level there. But still, the entire upside was very corrective. It was also clear in the price action. Look at this. You can see up, retrace, up, retrace, up. So definitely had some correctiveness there. Oh, sorry, Graham. I missed that actually in between the chats there. Sorry about that. I prefer the AO. Just because I'm used to that, let me quickly add a classical MACD here so we can take a look at the difference. Let's see. Yeah, to me, see, I like the zero line more here. It kind of makes it easier for me to establish what is the swing high, swing low. And with that, because of the zero line, I can establish swing high, swing low. I can establish what swing high, swing low belongs to each other. Therefore, I can identify if that is an impulse or correction. By identifying the impulse or correction, I can identify what wave it is, basically, what wave to fib, divergence and convergence easier, I think. And I like the coloring of the AO and the potential turnaround by using that as well. So those are the main factors why I like the AO more. So let me know if you have any additional questions, okay, Graham? Okay, cool. So let's take a look at the weekly here quickly to get some grabs here. Currently, it's looking like actually a potential 5-wave. Wouldn't say so yet, but maybe too early to tell, but could be. The day chart, let's take a look at that. Let's examine that from a very beginning. Let's see. Clearly, we see a first wave here in a 5-wave pattern. ABC correction for wave 1, wave 2, or maybe wave 2 here even. Then we see a third wave clearly here, a fourth wave here, and a potential 5th wave either here or here. I think the day chart does have that indeed. So kind of confirming what we saw in the weekly. Now you never know with Elliott waves, it could always be extension. But in any case, more importantly is that we had divergence between these tops. So if we put a fib, just out of curiosity, on this entire upside, we stopped at the 236 here, the next fall could go all the way to the 382 in that regard. We could get a pretty massive, don't know how, but maybe, from this point of view, all the way in ABC to 382, back to this support area. If we put a fib on this downside, there's a 618 tied into the 382 fib. We went all the way to the 786 fib and turned around and broke that support line. We also broke a daily fractal right in here. We're crossing the zero line back down. It's red. This to me seems bearish. We have a lower low, a lower high now on the day chart. Day chart is very significant. And from an LA wave perspective, we have tons of space to fall. Of course, we do have to be aware that this level could still provide headache and support this bottom. That's still far from here. All right, just taking a look here. I'm making it smaller. Let's see, the first move down went to the 786 fib as well. We're right at the minus 272 target. So a fall to at least the minus 618 is probably likely. Will it happen now? Not necessarily. This move could be a move on its own, and we could retrace and then to the 618. All right, so we have to. This is how we can move from from time frame to time frame to establish the most likely support, resistance, and potential move, and eventually we'll get down to the 50-minute level. So hang in there, and maybe we'll have a trade right now. Okay, could be in both ways, in fact. But let's visit. We're working on a puzzle. It's just like a puzzle, basically. We're like detectives. So definitely downtrend on the day chart with potential to fall there. Once again, let me zoom into the 50-minute world just to see something here regarding this downside. Okay, downside had a clear 5-wave pattern. Do you see that? Wave 1, 2, 3, 4, 5 with that classical wave 3 AO strong reading, divergence between 3 and 5. Correction. And then we had, yet again, a clear 5-wave pattern, in fact. 1, 2, 1, 2, 3, 4, 5 for 3, 4 probably here, and 5 now, or in 5 maybe. Not sure if we're finished with that 5 because it looks like within 5 that we are having a 1, 2, 3, 4, 5. So we probably, if you actually zoom into the 5-minute world now, probably will fall to, right now maybe to, potentially we could make a fall to 128 probably. Is that something I would like to trade? Not really at the moment, because kind of right close to the bottom, that is a support level, and the stop loss would be right in here. That's not something I would like to trade. It could fall. Anyhow, that set aside, the reason why I'm doing this is just to see if it's an impulsive reading. So far it is. So that is of interest to me, because that could kind of confirm that potential to fall more. In fact, this could be this definitely looks like a 5-wave here, plus a zigzag correction. This could be wave 1, 2. Within wave 3, we already saw a wave 5-wave. So this could be 1, 2. This could be 3. It's tumbling indeed. So this target seems very likely, actually, looking at that now, lower time frames. Let me see what Darshan had to say. I didn't read your comments yet there. Let me take a look. If I see testing below, yeah, in general, yes, as you probably already are aware of now, indeed. Let's see, other question. How do you get the AO on? Well, you go to Insert, Indicators, go to Bill Williams, and you'll have Awesome Oscillator. Yeah, Awesome Oscillator. So indicators, Bill Williams, awesome oscillator. All right, good. So it's looking like that the fact that this could be a 1, 2, 3, 4, 5 for A. This is a B, probably with an A, B, C. And this is starting to look like the green C right in here with actually a 1, 2, and we're in 3 probably. That could be just, actually it doesn't have to be green C. It could actually, that 5-wave motion could be actually A, blue A, then blue B, then blue C, and that would mean the end of green C. Because we have so much downside, that could happen. I apologize for all these other waves, but somehow I'm in any wave move today. You should notice, I guess, I don't know. The AO is strongly building to the downside here. There is a potential, by the way, of this being an ABC, and then we go down, we go up for an ABC, and then this actually becomes A, this becomes B, and we go down for C. All right, so it's a tricky spot. It's kind of a bit overextended on the 15-minute world just because we moved down already 400 pips within a few, in one go. Very tricky. It could be the 5th wave of a 5th wave of A, and we make that upside. So shorting here, it has some potential maybe for 40 pips, but then you could easily see a 200 correction go against you. So that's very, very, very difficult. We're also at the 618 target of the first wave. It's a classic, could be a classical zigzag. So A, B, right to the 382 fib, right to the 618 target. I think, to be honest, that either here or a bit lower, we're probably going to end this downside, and we'll probably be turning for that correction up. Is my bias at the moment, looking at these factors combined together. We have divergence on the 15-minute world now as well. If that were to be the case, this could actually be a very cheap long. If I'm confident in my analysis to actually do it, I'm not sure because it's still a pretty big stop loss. So I know I'm switching around sides here, funny enough, but there is more space potential to this upside. It's a bit risky, of course, logically. So maybe a break above this 50-minute fractal could be the indication that we are moving to the upside here. It will go slow probably with lots of waves. I wouldn't do it though, personally. Rehoboth. Well, 1 hour world, yes, indeed. 4 hour world, not, because it's actually trending here. It's a bit of a mixed signal there. Probably I would stay out at the moment. Raj, oh, absolutely. Yeah, I thought I was clear on that, but absolutely no doubt about it that it's a downside momentum now, 100%, clearly. So that's why the downside trade is with the trend, with the momentum trade. But the only thing is that we're reaching an area where I have doubts if it makes sense to even take an intraday trade because it's too risky, in my opinion. The risk of a turnaround and a retrace is, I think, too high at the moment. So I wouldn't trade the downside, even though we have that bias to the downside. Funny enough, this move down is exactly or approximately 370 pips. Often enough, the currency moves in Fibonacci sequence waves, by the way. So you're looking at, for example, a Fibonacci sequence of 89, right? 55, 144. I've never told you this, but it's very useful information. 233. 377, 34, you know the Fib sequence numbers, 23. Often enough, these Fib sequence numbers are used for the impulse on a particular time frame. So this is pretty valuable information, I think, to know about at least. It's difficult to use, but sometimes it's good because sometimes you see, I don't know, 5-minute world, you see a 23 pip drop. That's usually the end of that impulse on the 5-minute world. And you see some retrace. It could be 13 or 8, also a fib number, and then you'll see a continuation of that 5-minute world. All right. A 1 hour impulse usually has 55 or 89 pips move. A 4 hour world might have 89 or 144 or 233. Is it the exact science? No. But if you would start measuring it, you would see probably more often than you think a resemblance between that. In this case, the top is 131.97 and the bottom is 128.20. If you subtract 131.97 minus 128.20, the difference is 377. So I just for the fun of it, I never did it here, but for the fun of it, I subtracted it, and it was exactly 377, so I had to think about it, because it's obviously exactly the Fib sequence number. And that doesn't have to mean that it cannot break that bottom, but it is kind of a funny fact, so that's why. Anyhow, that could be another small reason. So I'm not looking for the downside, but basically, but the upside I wouldn't be interested right in here. It's too risky. But if we break this pink trend line downslope, that could mean the end of the impulse. If we break this 1 hour fractal as well, once we break above there and we move correctively, I think we can go for a long up to the 50 fib. Something like this. push above and hook back, it's risky, but that would still make sense for long, up to the 382 and then to 50 probably. And then we can look for downside again. Something like that. The upside is risky, is a counter trend. The turnaround at the 382.50, that is a great swing trade. In fact, the upside is an okay intraday trade. All right, that's my take on the EJ. I saw that actually it took quite a long time to decipher that. Still hope that you enjoyed it though. I think we're kind of running out of time to really look for an intraday still trade. We can only kind of scan. The 5-minute world is back to the zero line here. So what I would like to see is either a new fractal like this and then the break. So that will still take time, but we're getting there slowly but surely. Pound is just going sideways. And I talked to actually someone I'm mentoring, and the guy said, I'm surprised how little opportunities there are, and he's trading 1 hour, 4 hour charts. Okay, he's a swing trader. I'm surprised how little opportunities, a few opportunities there are actually in a week, maybe 5, 10. And he was actually expecting, tons in a day. You really only have that if you're probably only time you have that is if you're a scalper, in fact. Otherwise, patience is often the best reward there. And in my opinion, that last 1 hours just shows us, just confirms that, because really nothing happened. Funny enough, plenty of time to plan trades. And you know my plans for the Aussie Euro odd as well, and the CAD, right? And the EJ even. The odd is back to 32. Well, I guess we're getting close to the closing anyhow. Are there any questions you have regarding the above? Anything I said? Anything you want to ask me? Are you in any trade that you want an opinion on? I can give you. Maybe a trade management question. Okay, great, MP. Great job. Okay, okay. That's great too. We hope both is asking for dollar Swiss. Okay. Right, just fine. Okay, great. What supply and demand zone is a concept that kind of indicates the sideways range. It's a typical point where you have a move up, an impulse, you have a relatively tight consolidation zone, and then a continuation in the same direction of the impulse. When price gets back to this sideways box, there's a high likelihood of a bounce. When we get there, okay? And one way of trading that is an entry, for example, at the top of the zone or halfway the zone with a stop loss below that zone and targeting 3 to 1 basically. But you want to make sure that that 3 to 1 is realistic and preferably probably before the top. I don't remember exactly. Not sure about that. But 3 to 1 is what you definitely want to try to aim for. You want to see if that's realistic. If it's not realistic, you don't want to take the trade, basically. That's what it all boils down to. And you have these everywhere on all time frames. For example, here we had a box. We had an impulse, box, impulse. We got back in here. and we did make a move down. So the idea would be, an entry maybe here with the stop loss maybe above that zone. What is it? I don't know. Let's calculate it quickly. 40 pips, so 120 is what you're aiming for. It was 141.60 is a 3-to-1, which is here, if I calculated it correctly. So you got that 3-to-1 trade based off this zone here and the fact that we won't break it. Something we can look at as well. This type of trading, it's too many things to look at. Maybe we can include it maybe on a Wednesday, maybe, for example. Not always will they work, of course, logically, but that's the main idea. Dollar Swissy. Dollar Swissy is, I think, really difficult to say. It's so tricky. It's just a sideways range on the weekly chart, really. On the weekly chart, there's a good weekly trend line here, and on the day chart, you can see that it's quite close by. We have a pretty major support level here. We're at the 886. We could bounce here. We could bounce a bit lower. Somewhere in here, I think we'll get a bounce either here or a bit lower, I think, personally. Look at the euro dollar, it looks more upsided, so probably a fall to this support level is likely. If we do break that level, then then it's just a wacky formation, I think. It's just, this still made sense to me, but when we started to do this and break the bottom, then do the opposite, and then it's just this day chart is just so wacky. I don't like it. Looks like an impulse and slow down correction. So it depends how far we can go, but at some point we can pop, I think, but who knows? Tricky. I don't see anything I would like to trade here, to be honest. Because of that formation. If anything, I would say, looking at this 1 hour chart, this could be a bouncing spot here. Would I want to trade at? No, because it's too risky. It's definitely downside momentum. So it's close to support, but it's a downside momentum. And that's not an interesting combination for me because it's too risky, both sides. Euro dollar 133.47. Along at 133.47. I think that, where's your stop loss, MP? I think that should be fine. I think that you have a high likelihood of breaking this top. So I think you should be good there. I think we're back to the zero line. We should see some bounce here, then move down, and then we should see a break to the upside. Looks good to me. It depends where your stop loss is as well. I mean, and how much your original risk was, why you took it, where you took it. But in general, that would be the answer with, the knowledge that I have now. Okay, if you want to add something to MP, do it now. Otherwise, I'm going to slowly round it up for today. That would be the end of the week. Oh, there's MPs asking which indicators are perfect. A funny question because perfect is a difficult goal to achieve. So the answer is we don't know. Not that I know of, and probably if there is one, then the person is keeping that very tight to himself or herself. But I think you do have indicators that are very good, at least. Let me say it this way, and one of those is the AO for me. Yeah, definitely. I mean, there is some validity of taking it right now. In fact, I mean, you know, bounce off the 886 fib, you're catching it then at a high. You know, it is a likely bouncing spot, and in fact, it's a tight reward to risk as well. If it going down all the way to the 886. As I said, I like breakouts more nowadays than fibs, so I'm not focused on catching those fibs. Maybe we should look at that more often. So I was more looking like up, down, and a break. That's why I'm waiting for that. But if you like fibs, could have made sense to take the 786, for example. All right. So see you all tonight, I hope. All right. Go through trading strategy. So I hope you all like that webinar. It's going to be only me because Tarantula is still, or not still, enjoying a week off. Okay. So I hope to see you tonight. And good luck with trading today. Be careful. August, in general, once again, you know, is very tough month. It's a good practice month because if you can make money in August, you can probably make money anywhere, anytime. Okay, so it is normally generally tougher month. Okay, so beware of that. I think it's 5 p.m. UK time. Yeah, it is. Okay, I got confirmation because the invite was somehow earlier. I got confused, but I got confirmation from the coordinator that it's 5 p.m. UK time, 6 p.m. Central European time. Okay. So see y'all then. Cheers, everyone.